Hello, everyone. I'm Dagan, and this is my debt financing analysis presentation on Uber. This chart highlights Uber's shift from a highly leveraged capital structure in the beginning of 2021 to a much more conservative position by Q1 in 2025. The reduction in the debt to equity ratio indicates that Uber has been actively paying down its debt, potentially preparing for a more stable growth phase in the future. Here we see Uber's preference for long-term financing with a gradual reduction in long-term debt since its 2024 peak. The short-term debt has remained relatively stable, indicating consistent working management. This mix supports liquidity while reducing refinancing risks. Furthermore, Uber issued a $1.5 billion in convertible notes in late 2023 in order to refinance high-interest 2025 notes. These notes are attractive to investors because they offer conversion rights and a capped call feature that limits dilution. They provide Uber with lower borrowing costs as well as strategic financial flexibility. This pie chart compares interest rates of Uber's old and new debt instruments. The older notes carried a 7.5% coupon, while the newer convertible notes have a much lower 0.875% rate. This significant difference helps Uber reduce interest expenses and improve profitability. As far as investor takeaways go, from an investor's point of view, Uber's reduced leverage, stable short-term obligations, and cost-effective debt issuance are all positive indicators. However, potential investors should keep an eye on the company's plans for any future debt rollovers or stock dilution from bond conversions. Here are my references. Here's my design statement. Thank you for listening.